Click the bell icon to get latest videos from Ekeeda.
Hello friends. When NPO is newly established, it will not have opening capital fund, opening assets or opening liabilities. In such case, how to prepare final accounts at the end of the year, that will be understanding in this question. Let us go through the question. Vishwa Shanti Mandal was established on 1st April 2011, and the following is the accounting information for their first year, that is 2011-12. Receipts and payment account for the year ending 31st March 2012. There is no question of opening balance sheet, so directly we are required to consider a receipts and payment account. On receipt side, first item we come across subscription. This will be recorded as income. Entrance fees. Here second adjustment says entire amount of entrance fees to be capitalized. So we are required to add this amount to capital fund. Next, donations. Second adjustment says donations are to be capitalized. So we need to add it to capital fund. On payment side, we have furniture. That is a purchase of asset. It will be recorded in balance sheet on asset side. Books. It can be also considered as asset. Printing and stationery expenditure, newspaper expenditure, office rent expenditure, salary expenditure. Fixed deposits, it's investment, it will be recorded as asset. Buy balance carried down, closing balance of cash and closing balance of bank. This will be recorded as asset. First adjustment says depreciate furniture by ₹1,000. So one effect will be expenditure. Second effect, on asset side we are required to deduct this amount of depreciation. Second adjustment, entire amount of entrance fees and donations are to be capitalized. We have already marked that entrance fees and donations will be added to capital fund. There are 1,000 members, each paying ₹100 as annual subscription. There are 1,000 members. So we are required to get every year 1,000 multiplied by 100. That is ₹1 lakh. Here we can see that subscription amount received is 95,000. We are required to receive entire amount of 1 lakh. So this will be recorded as income and difference will be recorded as outstanding amount, that is ₹5,000. It will be recorded as an asset. Outstanding salary is 600, office rent 700. Outstanding salaries we have to add to expenditure. Second effect will be liability. Outstanding office rent we are required to add on expenditure. Second effect will be liabilities. Let us start with receipts and payment account. Debit side we have receipts. There we have first item subscription. Here they have given the amount actually received 95,000. In adjustment they have said Adjustment number 3. There are 1,000 members, each paying rupees 100 as annual subscription. So 1,000 multiplied by 100, it comes to 1 lakh. On credit side, we'll be writing actual amount received rupees 95,000. To this we are required to add amount receivable rupees 5,000. So whole amount of subscription earned by NPO is rupees 1 lakh. This 5,000 will be recorded then as asset. So in balance sheet on asset side, outstanding subscription we have recorded rupees 5,000. Next we have entrance fees received 10,000. Here adjustment number 2 says entire amount of entrance fees to be capitalized. So this amount 10,000 will become part of capital fund. There is no opening balance of capital fund. We have added entrance fees 10,000. Next we have donations received 75,000. Second adjustment says entire amount of donations are to be capitalized. So it will be added to capital fund. On liability side, to the amount of capital fund we have added donations 75,000. Let us go through now payments. First we have purchase of furniture 20,000. On asset side, purchase of furniture 20,000 we have recorded in inner column. There is purchase of books 15,000 that will be recorded as an asset with the assumption that books will be used for a period of more than 1 year. If we assume that books will be used only for 1 year period, then this item will have to show as expenditure. As amount is considerably big, 15,000, we can assume that it will be used for a period more than 1 year, and accordingly we should put a note below the problem that we have assumed books as asset. So on asset side we have books 15,000. Printing and stationery 5,000. This will be recorded as expenditure. Income and expenditure, debit side, printing and stationery 5,000. Next we have purchase of newspapers. Amount is 2,500. This will be recorded as expenditure. Debit side, expenditure, newspaper, etc. 2,500. Next we have office rent 7,300. There is adjustment on this item. This will be recorded in inner column. Office rent 7,300. Next we have salary 8,400. There is also adjustment on this item. Salary 8,400. Fixed deposit 1 lakh. This will be recorded as asset. Asset side, fixed deposit 1 lakh. Next we have closing balance of cash 1,800. Bank 20,000. Should be recorded as asset. Closing balance of cash 1,800. Closing balance of bank 20,000. Let us go through the adjustments. Depreciate furniture by 1,000. This will be deducted from asset furniture. From furniture we have deducted depreciation 1,000. So now net furniture is 19,000. Depreciation 1,000 will have second effect to the debit of income and expenditure account as expenditure. To depreciation on furniture 1,000. Entire amount of entrance fees and donations are to be capitalized. We have already given effect to this. There are 1,000 members, each paying 100 as annual subscription. We already done this adjustment. Outstanding salary is 600. This will be recorded as liability in balance sheet. Balance sheet liability side, outstanding salary 600. This will have another effect in income and expenditure account and debit side. To the item of salary, we have to add outstanding amount. We have added outstanding amount 600. So now total salary is 9,000. Second effect of this outstanding salary, we have already recorded in balance sheet as liability. Next we have office rent rupees 700. This will be added to the expenditure office rent to the debit of income and expenditure account. Office rent 7,300. To this we have added outstanding portion 700. So it has now become rupees 8,000. Outstanding rent 700 will have second effect on liability side of balance sheet. Outstanding office rent second effect, balance sheet liabilities. We have recorded all items and also we have given effect to all adjustments. Let us close now income and expenditure account first and then balance sheet. We have closed income and expenditure account. It is showing balancing figure on debit side 74,500. That is excess of income over expenditure, which is called as surplus. This surplus will be added to capital fund. We have added surplus to capital fund. So now capital fund we have 1,59,500. We have closed liability side, asset side. We got total 1,60,800. It means balance sheet is tallying. In this question, we learn how to give effect to capital fund for a newly started NPO where there is no opening capital balance. Thanks for watching this video. Stay tuned with Ekeeda. Subscribe to our channel Ekeeda. Thank you.